and welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, the 12th of March. It's myself, Andrew Monk, CEO of VSA Capital, and good old Phil Smith, our Tech and Transitional Energy Analyst. Morning, Phil. Afternoon, Phil, whatever it is.
It's just the afternoon there, Andrew.
Yeah. Right, so here we go again. Actually, the trouble is at the moment, the whole news flow is just like Iran, and somewhat pausing everything. Although one comment I would make for tech and transitional energy on Iran is that the future of Taiwan is looking exceptionally wobbly, because it's quite difficult to justify why China shouldn't invade when America feels it's fine to invade Iran. Russia feels it's fine to invade Ukraine. Why shouldn't China have a go? And if you're thinking about that, then your mind has to turn to TSMC, which, of course, basically manufactures chips for the whole world. And, is the whole world going to allow China to control TSMC, which is effectively what would happen, I think, if they took control of Taiwan. Actually, it's a fascinating story, TSMC, how it actually got going. I don't know. Do you know the story of how it got going?
Oh, go on. You're going to tell me.
Well, I was going to tell everybody a little bit. Exactly, but actually, it was started by a guy, basically Morris Chang. Chang actually came out of China, funny enough. He was there in World War II, and he escaped to America in 1949 out of China. He actually failed his PhD qualifying exam twice for MIT. So joined Texas Instruments. Spent 25 years at Texas Instruments learning that. Well, you were there as well.
I was there for 10 years, yeah.
I think he was a little bit older than you.
Yeah, a bit better.
And he built their semiconductor division into the powerhouse that it was. And a lot of people thought he'd get the CEO job, but he didn't because he was Chinese. Anyway, in 1985, he was 54. Maybe that's when he should have been retiring. He'd made quite a lot of money. And the Taiwanese government said, look, could you come back to Taiwan and build their tech sector? So he looked at it and he thought, you know what? There's a gap in the market here. What about just creating a fab that makes everybody else's chips? And at the time, it was sort of unheard of. Anyway, he did it and made a sort of pure play foundry, and everybody started signing up, like Intel and IBM. Then Jensen Huang of NVIDIA did it, and Apple did it, and everybody started doing it because they didn't have to go and build a $10 billion factory to manufacture. So it became such a massive company from that. He actually stepped down from reading. He retired at 78 in 2008. No, actually, I tell a lie. He retired. All right. But then, at the age of 78, that was during the financial crisis, so nearly 20 years ago, TSMC got into trouble. So he came back in, fired the CEO. He doubled down on R&D expenditure when everyone else was cutting it. And basically, that was what completely dominated the position and, what a word, crushed Intel, etc. So, there you go. That's how it all got started. It is probably one of the biggest bottlenecks around the world. It's a bit like the Straits of Hormuz we all know about now because you can't get oil tankers through. Without TSMC, chips just wouldn't exist. Think what needs chips. He's 94 now. He's past trying to save it. Does still play competitive bridge for what it's worth. Anyway, there's an interesting story. You didn't know that, did you?
No, I didn't know that history. I think it was CEO as well. Wow.
But that probably is something that people should be thinking about when they're looking at the tech and transitional energy sector. That's, of course, if they're not busy reading the research note. You actually published one this week, Phil.
I did. I do them now and again, Andrew.
Yeah.
Do you know?
Do you want to say who it is, or shall I?
You can say this one, because I had an announcement this week as well.
Well, it was an initiation of coverage of Origo.
Yep.
Obviously, somewhat our favourite client at the moment, but it's all sort of happening. Yeah, they announced this week a major contract, didn't they, from Ultra Global for their sort of pod system, £6.28 million from memory.
Yep.
I think the key to this is that there's probably a pretty healthy sort of margin on that. and it means that their treasury stays nice and strong. It means that forecasts should be met, etc., etc. All that sort of lovely, lovely stuff, which allows them plenty of scope to carry on with what is the real exciting bit, of course, which is the autonomous airside. And your note, of course, what was interesting about that was, as well as looking at the growth of auto dollies and auto cargo, you spent a lot of time looking at what their software applications are actually worth.
Yes.
And of course, that actually is the bit that people don't really talk about, and probably is really, really valuable. So anyway, for anybody who hasn't got the note and wants to see it, do let us know. If anybody's got the note and hasn't read it, go and read it. It's good bedtime reading. If you haven't read it, I've just given you a quick synopsis and just go and buy the stock. There you go. Simple as that. Easy peasy, lemon squeezy. Anyway, have you got any thoughts about the big wide world, Phil?
Well, the TSMC one, of course, is very, very interesting. I mean, they are building wafer fabs out in the States, but I just think that with silicon wafer fabs, the technology is so complicated, so delicate, that anyone who wants to take charge of one by whatever means needs to have a highly cooperative workforce, and also the supply chains into these wafer fabs are massively complex. They're hugely international, and so there's that delicacy in there as well, if you like, should someone choose to take one of these things.
And by the way, I'm not advocating war, and I'm not saying it will happen tomorrow, but I'm just saying that you need to think about it.
Yep. Absolutely.
I mean, the other thing that's obviously dominated news this week alongside Iran, that what knock-on effect of it, of course, is that bond yields have been going up. The hopes of interest rate cuts have been somewhat dampened down. People trying to renew their mortgage at the moment are finding it not very interesting, or rather worrying, shall we say. It's rather difficult. But there we go. Life carries on. And let's go through the news that you picked up this week. There's quite a lot of things coming out, so let's just pick up the sort of interesting ones.
There is. Halma had a trading update
this morning.
Did indeed. Its ticker's HLMA, just under 15 billion market cap now. The shares are up by 49% in the last year. This is very much a technology company, and they have three business areas: safety technologies to help people in their place of work keep safe, environmental analysis technologies for monitoring all sorts of quality, of air quality, water quality, all this kind of thing, and also healthcare technologies. So this was a trading update ahead of their financial year that ends 31st of March. Said quote, further strong progress in the second half, consistent with existing guidance. They've also said that delivered strong compounding growth in returns, 23rd consecutive year of adjusted profit growth, and they're expecting mid-teens percentage organic constant currency revenue growth. EBIT margins are around 22.4%, so good high operating margins there. It just reflects the high quality of this business, strong cash conversion. So all looks to be going very well at the moment for Halma. Continued growth. They made it's a very acquisitive company. I mean, it's been a buy and build over the years. They have nearly 50 companies within their portfolio, so it's quite complex, but they've invested £450 million in acquisitions over the period. Results expected in June. That's Halma.
Very good.
Another one of our this industrial technologies, if you like. This is IMI. 6.9 billion market cap. Ticker is IMI. Their shares are up by 40% in the last year as well, so doing very, very well. And IMI is involved in, it's really interesting, this is in industrial automation, process automation. They're across healthcare, energy industries. So it's all about sort of fluid control and motion control in operations. So they reported revenues up by 5% to £2.3 billion, good drop through to their profits. So their operating profits rise by 6%. They're also upping their dividend, I think. Dividend per share up by 10%. What shareholders want to see. Just within the businesses, they saw the process automation business up by 11%, and industrial automation was flat, but aftermarket orders were up as well. So just seems to be going generally very, very well. So capital spend going on, people investing in equipment across industry. So no matter what is happening within the wider world, you can see from IMI and from Halma as well that capital spend, is continuing.
Hopefully it won't have too much of an impact because those have both come out really before you can come and
That's
the
right.
Iran war.
Yeah.
And there's no question that certain decisions are getting paused because of the Iran war until people have a bit of certainty of where it may end up. We're doing some deals in the Middle East at the moment, and I think it's fair to say that they have gone on pause or hold, or whatever you want to call it. But anyway, carry on. Carry on.
Yeah, especially, people like IMI as well, they've got part of their exposure is to the energy market, the power markets, and LNG, for instance. They're exposed to capital spend there. But we'll see. Yes, these are, as Andrew points out rightly, historic. A computer center. This was quite an interesting one. The ticker's CCC, 3.2 billion market cap. Shares were down by 5% today on their results, but they're up by 20%, just over 20% in 12 months. Now, Computer Center is a big IT supplier. Across the board, it's hardware, it's software. They're into the supply in the US, the hyperscalers, but also the UK and Europe. So these full-year results are quite an interesting read, just in terms of some of the financial metrics and how they work. Their overall revenue was up by 32%. For the year. The gross profits were up by 10.5%. I'll get onto that because the gross margins fell slightly. It was probably caused a bit of market reaction, but the underlying operating profit was up by 11% to 274 million. But just looking at the margin performance, so really, really strong revenue growth here. But they pointed out that North America had an outstanding year from enterprise and also hyperscale customers investing in IT and obviously AI-driven, a lot of capital spend. And they said that now that area accounts for 40% of its operating profit, but it was that area where they saw the lower gross margin coming from. So it's almost like they're growing that top line really, really strongly, taking a bit of a hit on the gross margin to have the business, but underlying it's dropping through to the profits. So you have to really read through the financials here to see what's going on. They are obviously confident in things ahead. They're upping the dividend by 7.6% to 51p, and they said they got a record product order backlog of £7.1 billion. So orders continuing to grow strongly.
You're just trying to impress me by saying that you read to the bottom of all these RNS statements, are you?
Yeah.
I do as well. And you have to be careful. And On the Beach was a classic today. I've always been wary of On the Beach. Travel, this has nothing to do with travel, but you could argue On the Beach is a technology company, actually, because it's sort of all online. I can't stand their advert, though. God, it drives me insane. I would not want to be on holiday in the same hotel as those customers they have on their advert. But the point is I've always been slightly skeptical of On the Beach anyway. But actually, they came out with a statement today, and of course, it all started off, everything's good. This is up this is up this is up this. And you read all the way down, you get to about page, I don't know what. Oh, there's a profits warning.
However,
why people do that, I don't know. They should just have in the headline, we're giving a little bit of a profits warning here, guys. Make life a lot easier. But anyway, no one's going to do that. I know they're not. Anyway, just an idea. Bloody stupid, really. Anyway.
Well, always look for the however. That's the trick. ITM Power.
Yep. They had a 20 megawatt. Was it 20 megawatts?
20 megawatt project. Yeah. Coming through. So, ITM Power, ticker's ITM, 391 market cap, and the shares have been doing very well. We've been discussing this one on the podcast, they're up by 136%. They've announced two updates. This is Morgen Energy, who they're working on, and Andrew's right. So 20 megawatts notice to proceed. And this is to do with the West Wales hydrogen project in Milford Haven, which has reached what we call FID, final investment decision. So ITM will be deploying its Poseidon, its electrolysis process module for that particular hydrogen project. They've also announced that they have signed a long-term service agreement as well with Morgen Energy for this project. So recurring revenues coming in there.
So here's a little thing, because people quite often, they go, Andy, you're always quoting, so we've got 20 megawatts here or 5 megawatts there or whatever, and sometimes you talk megawatts, sometimes you talk megawatt hours and things. Can you please explain what exactly that is? And so just for your interest, there's obviously, if you have continuous 5 megawatts.
Yes.
Right? That is equivalent of powering about 10,000 houses.
Yeah. Yep.
So 20 continuous would be 40,000 houses. But obviously, if it's megawatt hours, that's a lot less because you've only got it on the hours and you're only using it. So, but just to put it into perspective, that's what it is roughly.
Well, it's important, really important to understand when you're looking at the energy sector.
Correct.
Because you've got that, as Andrew's pointed out, you've got that nameplate power, what it could deliver, and then you've got the actual delivery over the hours.
And talking of which, sometimes I give out these interesting statistics. I know that when I told everyone to stop using ChatGPT, I think it was ChatGPT 2, a few people listened to that. Well, I've got a bit of an update on ChatGPT, all right? Because your standard ChatGPT, I think now is 5.2. You actually want to go in and switch it to 5.4, all right? Because that does more thinking. It's a little bit slower, but does an awful lot more thinking. Of course, it costs the ChatGPT more money because they have to do more thinking, which means more data center work power. But go into your ChatGPT and switch to ChatGPT 5.4. You'll get better answers.
What a top tip that is.
That's
right.
Top tip.
I'm going to give it a whirl. Now, carrying on. This is a very interesting company. Amcomri. Ticket is AMCO. Market cap now.
Never heard of that.
No, market cap now is £88 million. The shares are up by 130% in 12 months. And very well.
What do they do?
Trading update. What they do is, this company has an acquisitive strategy, and it's in engineering companies. So mechanical engineering, electrical engineering companies. So it's a classic buy and build on the market. Buy, build, and improve.
Like Williams Holdings back in the day. That is back in the day, by the way. That was all in the 80s and 90s. But anyway, that just shows how bloody old I am.
Got me on that one.
Anyway, all right. So they're doing all right.
So they're doing all right. They're expecting full year revenue of 70.9 million, up from 58, but it's up by 22%. And adjusted EBITDA of 9 million, up by 7.7 million. But this is driven by, always looking at this, there's underlying demand for the services there, and obviously they've been acquiring as well. But it does seem to be that they're making a lot out of these acquisitions in terms of the growth the organic growth that they're now getting out of them. So that's one to watch. That's Amcomri. Origo, we've talked about. Avon Technologies.
Mm-hmm.
Avon as a ticker. One we've covered plenty on this podcast before. Market cap now is £549 million. The shares are up by 33% in 12 months. So this is military products. This is all about protective equipment, so it's helmets. It's NBC suits. So this is all about protective equipment for a highly hostile environment. They won an order for filters for a quote Middle Eastern customer. Unnamed, the order worth $12.7 million, and this is for filters that are used in respirators to protect against chemical and biological warfare agents. So, what's interesting about this now? This is one on revenues and revenue lumpiness and revenues moving over trading periods and how to handle that, because sometimes it can cause a profits warning, but if the orders haven't gone away, it will eventually get delivered. So Avon had a trading update in January, said that it was on track to meet its full-year financial targets, but the US business, called Team Wendy, this is protective helmets, had a strong order book that, quote, saw a slower first quarter with a government shutdown in the US. Okay, so it slowed down the orders that were coming in, which contributed to the lowest revenue come from the US Department of Defense. So they said, and quote, assuming no further extended government shutdowns, we expect these impacts to be temporary. And indeed, they proved to be. They said that now we continue to see strong global demand for their products. And the order just announced on today, a couple of days ago, enables them to meet commitments through full year 26. So you've always got to, if the orders haven't gone away and have not been rescheduled out far,
you should always be wary of, it's just one day your year end and things can happen. You do have a little bit of wiggle room for about a week with your auditor normally, that if something happens a week after your year end, you can actually mandate it. But you should be aware. I mean, it's very true in our industry, and I always write about it when I write our reporting accounts. The year end is just a date. We do deals that, sometimes take, 6 to 12 months, very big ones. but we only account for it when they actually happen.
Yeah.
And it could easily just slip a month and suddenly, whoop, it wasn't in that year, it was in that year. So they can be, you do have to be quite careful, I think, with them and look at how the longer term picture of earnings growth is going rather than necessarily just on a 12-month view. But I'm sure people know that. They must be sensible investors. I'll just finish off, actually. I noticed the stock was up 10% today. That's just triggered my mind. It's got its interims coming up. It is sort of tech and transitional energy because it's sort of transitional. It's Quadrise, which does emulsion fuels. It's obviously the main area that they're targeting is shipping to knock out the NOx and SOx and actually make the ships a little bit more efficient. Turn the ships green. They've got their interims coming up fairly soon. We are doing a roadshow, so if anybody listening to this wanted to have a meeting with Quadrise after their interims and the new CEO, Peter Borok, then DM us or whatever you do. I don't know, call us, whatever. Get in touch. We'll fix you up a meeting. And that's probably about it, isn't it?
It is.
There you go. All done pretty quickly, fairly painlessly. No one got hurt. Any comments, do let us know. We love getting comments. Anybody wants to sponsor it, pay us lots of money to do this, you can do that as well. And we will be back next week.
Chat next week.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.